Hey guys, it's Hannah, and this is the weekly market wrap-up. It was a pretty crazy week in the equities as major indices in America rode one of the most turbulent sessions of the year. The Dow Jones down below 15,000 points during intraday trading. The Japanese Nikkei can be blamed for the volatility as it caused global weakness when it crossed below the 13,000 point threshold. The yen is now above the US dollar due to the carry trade volatility in the Forex market. Now, with all that said, the Dow Jones did end up closing up 0.5%, and the S&P managed to gain 0.85% over the prior session, so not too bad. It appears that the Fed will continue with quantitative easing as speculation is building from tapering rumors in the global finance sector. Eyes are now peeled on the U.S. Labor Department's job report. Daniel Alpert of Westwood Capital had something to say when he recently stated that the investment community may be taking a closer look at the quality of jobs created as opposed to the quantity. It appears that quality nor quantity of jobs are impressive, only leading to further speculation that QE will continue. The big question of the day is whether or not recent volatility represents a buying opportunity in U.S. equities. Now, the bears argue that the rise in equities is due to the Fed's reflationary policies and that real indicators are not supportive of higher gains from here. But then you have the bulls countering that any substantial light in any asset necessitates a correction and that these downside occurrences are needed to maintain the health of the economy. Getting technical, we can see that the S&P 500 has been on a 7-month bullish ride supported at the 50-day moving average. Right now, it's too difficult to say that equities are bearish unless the indices close 3% lower from here. For the S&P 500, the downside target is 1575. Moving over to currencies, in one session, the US dollar lost 1.2% and at its lowest point was challenging the 81 level, which naturally drove up many commodities such as crude oil and gold. It appears the fear trade is back on, but it is important to mention that late in the session, the dollar rose over 0.5% against its intraday low, which coincided with the late rise in equities. At this point, institutional traders are staying in cash or moving toward other safe haven currencies like the yen. All right, let's move over to winners and losers. Don't you just love a good underdog story? Well, that is certainly the case with Ambient Corporation, as they are this week's winner. AMBT shares have been declining for several years, but they popped up 51% due to intense speculative buying, 2,000% over the prior session to be exact. An important thing to notice, though, is that the peak price point was capped at the 200-day moving average, but the more worrying sign is that the difference between the peak price and the closing price was a whopping 45%. This shows that it was only speculative money that was buying up these shares, and a collapse could be in the near future. We wanted to include AMBT as a winner because we want to recognize that while any stock on any day can have a major lift, important clues in the technical charts reveal whether a stock is an investment or a trade. In this case, AMBT is a pure speculative trade. Our loser this week is Rosetta Stone. RST was rising along with the general equities market, but turns out the price peaked in the beginning of May. Since then, we've only seen decline, and finally on Thursday, shares gave up 12% of valuation. And last but certainly not least, precious metals. Early in the session, spot gold was challenging the 1425 barrier, but ended up giving up those gains to only close at 1412. Gold still managed to close nearly 0.75% higher than the previous session, but there are still many question marks with gold. First, volume accumulation is still weak, down 59% against the follow-through buying activity of April 16th, which only tells us that large institutional buyers have not moved into gold. Second, current spot gold price is below 38% retracement of the decline that began on April 12th. On a positive note, platinum has joined palladium as the only other precious metal to clear its 50-day moving average. P must be a lucky letter when it comes to precious metals. Platinum is one of the rarest elements on Earth, and positive buying activity suggests that we are not yet done with this move up. Many experts forecast that platinum will enter into a supply deficit in the years to come based on rarity and potential disruptions within South Africa's supply chain distribution. So that's one to look out for. Well guys, that wraps it up. Thank you so much for joining us for another weekly market wrap up. If you're not sick of us yet, make sure you hit that subscribe button so you don't miss any of our updates. You can also like us on Facebook and Twitter and email us at info@BuyOnNetwork News to tell us what you love and you hate. For VNN, I'm Hannah Bernard.